Walmart has underperformed the retail sector and the market more broadly this year. Now, Wolfe Research expects that trend to continue. The analyst there has downgraded Walmart. This is a big controversial call to an underperform. $95 is the price target. Joe, I'm going to give you a crack at this one. What do you do with this? They say sell Walmart. They say they've taken their eye off the ball.
What do I do? I do nothing.
Is what they're saying.
I mean, come on. First of all, it's a $95 price target. The stock is $100. You're telling me to short it at 100 and buy it back at 95? It's ridiculous. I'm looking long term at the business model for Walmart. I love the infrastructure acquisition with Jet.com from a couple of years ago, $3 billion. Oh, by the way, then they spend 5 times that to get exposure to the emerging market consumer with the acquisition of Flipkart. It's a longer-term play for me. I've said that over and over again.
Yeah.
The high was January of 2018 at 109. We're going to elevate above that at some point. It's not like we're coming off the loftiest levels for Walmart.
Okay.
And I like the transition that the company has been making. I believe in it.
You own Target. Yeah. Does that mean you agree with this call and you'd sell Walmart?
I wouldn't sell Walmart here. Walmart. The problem with Walmart right now, in my opinion, is they spent so much money on Flipkart, and they're having issues with that. They're bleeding cash because of that. But that's something that they felt they needed to do. They needed to get that exposure. My biggest complaint still, when I look at Walmart, look at Target, and you compare the two, is Walmart has so much on the side where they get the very low margin business. It's on the grocery side. That is almost half or about half of what they take in versus a Target that takes about 20% of that.
Okay.
So I like the margins better for Target. I look at where it's trading in terms of a PE. It's cheaper. They give you a great dividend yield. They're buying back stock, and they've put that $7 billion into what they're trying to do in terms of changing that store to be something a little bit different, a little bit more modern, and all the rest of that. So do I think there's more upside in Target? Absolutely. Do I hate Walmart, or do I think Walmart's going to 95 tomorrow? No. I think Walmart's just fine.
$5. That could happen in an instant.
Exactly right.
I appreciate his call. Analysts are notoriously poor on picking price targets. But if you look at what he's saying, you're paying 20 times for this company with flat EBITDA, with basically flat growth, flat earnings going out. So I don't know that's a short, because there's just a cult of Walmart. It's such an important part of the index. More than 50% of the shares are owned by passive investors.
I get it, but fundamentals matter, right? They say they've begun to allow pricing to creep up on packaged goods. They say the pharmacy business is facing difficulties. That's their word. And then Amazon's transition towards Prime one-day shipping could hurt e-commerce growth at Walmart. Right. Those are all legitimate concerns.
And I agree with this fundamental call. And I think we'd be able to see some of those trends.
Long before his call, there was a big debate going on about their CapEx expenditure now that they've gone into online in such a big way, both domestically and internationally. Maybe why this stock has stalled out is people are waiting to see what the new model is. How much do you have to spend in emerging markets to stop the cash flow? How much do you have to spend to catch up to one-day delivery on grocery? And that's not something Walmart's ever done since its inception, to go into the world of an Amazon and say, look, we're going to spend $5 billion this quarter, and you shouldn't care about it. That's not the world they live in. And maybe that's...
And we're going to lose money in those revenues we're buying versus being profitable.
They won't exist in 20 years unless they do that.
All right. Let's leave it there.